I will start off by giving a quick update on some of the new things on Cashflow Portal. We're going to talk about flexible fund and accounting today. Okay. And we've been getting quite a bit of customers on the flexible funds. In fact, I had like 4 calls this morning and 2 of them were about flexible funds. So I'm going to share my screen. But before I talk about that, I want to talk about some of the new updates on Cashflow Portal. The most exciting update is about banking. So if you go into banking now, I just create a bank account that has $1,000 on it. And when I come in here, I deposit from North Haven Terrace, and that's $1,000 being deposited. And if I want to add more bank account, I can add it from my North Haven Terrace bank account. So for some of you, this is basically the equivalent of an online bank. We use a bank called Core Bank. And we are not a bank ourselves. We use Core Bank, but you can create an account directly here. You can see all your transactions. You can make distributions from here. The benefit of doing this is this will be tying to our accounting and fund admin services. The idea is if we are going to do all your accounting and all your books, if the transactions are happening within our bank, then we know all your transactions and your final books will be a click of a button, as opposed to you have a separate QuickBooks, you migrate everything there, you do all the books here, and then you put it back into Cashflow Portal. So this ties in really nicely. The vision of Cashflow Portal in general is you start with underwriting of a deal, whether it's a fund of fund deal or a actual syndication, because you can actually put in a fund of fund deal on our underwriting software now. Then you raise the money through our CRM, which includes a bunch of the automations, very much like Go High Level. It has landing pages, very nice landing pages, pipelines to track your biggest investors. Then you use the investor portal to raise the money. And that's what we're going to talk about mostly on how the investor portal keep track of the flexible funds. Then finally, within the investor portals, there is a fund admin section where you can do all the accounting, all the income expense tracking, even the K1 drafts. And the K1 drafts and the accounting gets easier when you are using the Cashflow Portal Bank, because then you see all the transactions right there and then. You can still use your bank. There's no problem. You can plug and chug, but that is something we've been building for the last few months. The idea is we will create a end-to-end operating system for funds and syndications, going from raising money, creating a bank. You don't have to go to the go to a Chase bank to create your bank. You can just create it in less than 5 minutes. I did it. You can start using that bank to raise money. One of the benefits, by the way, say you use like your own bank. Okay, so say you use your own bank. For ACH funding, so the LPs can fund their investment through their Chase or Wells Fargo. If you don't have a Cashflow Portal bank, then it is about 3 to 5 business days. So it takes a while to get the LPs money. If you have Cashflow Portal's bank, then it takes about only 2 or 3 days. It's a lot faster. Conversely, when it's time to do your distributions, if you have your own bank, it takes about 3 to 5 business days to make a distribution. Whereas with the Cashflow Portal bank, it is next day. So it's a lot faster. It's like 3 to 5 times faster. Also, if you're using your own bank, we technically connect with a payment provider called Duwada. And Duwada charges us a bunch of money, and we then pass that money on to our clients. And so we can charge up to $25 per ACH transaction. That's for both the funding and the distribution. Whereas if you use the Cashflow Portal bank, again, we're not a bank, which I just called it the bank on Cashflow Portal, then it's up to $1 per ACH transaction, which is, you can call it up to 25x cheaper. Okay, so the goal is we want to create this integrated system that will eventually add to our accounting and our fund admin. So that's the exciting new update that I want to tell more about before I go talk about flexible funds. If you have questions, feel free to put it in the chat there, and feel free to raise your hand and then I can unmute you. You can speak as well. So I want to make this pretty interactive. To get started, you literally just go to the banking, and then you click on add new entity, and then that will take you to a different page. The reason, again, we are not a bank, so you click on OK, and that will take you into this page. Don't be alarmed on this page, and all you have to do is click on next, fill out this information, click on next, and so on. That definitely takes less than 5 minutes. So there's that. So I'm gonna go back here. Great. All right. Let me pause here for a minute or two. Any questions about the banking side before I start talking about flexible funds? Yeah. So one of the questions about how does the multiple entities involved in the transaction? So the entity that you use is the main entity. So not your manager LLC. You can create one for manager LLC, and it only needs the beneficiary owners of that own more than 25%. It does not affect the legality of cap raising. For the same reason that creating a bank in Chase does not affect the legality of cap raising. Okay, so there's that. Okay, and then David said, "I'm not happy with the 25 actually sent fund directly, which only cost me $5." Thank you so much for David for saying that again. And then with Bank of America, it gets there next day. Thank you so much for saying that. And that's why we want to create our own bank. But with Bank of America, it was $5. With us, it's $1. So we're cheaper. And by the way, it's not like we try to charge $25. There are so many reasons why. Let me explain why it's slower, first of all. It's slower because there's a difference between when something does a ACH pull versus an ACH push. ACH pull is I'm a third party. I don't know either party's balance on the bank account. I'm going to pull $50,000 from this bank. But because I don't know the balance, I need to let it sit for 3 business days so that I can send it to the second party. And because I don't own either bank account. So there's like a third party, and that is more expensive in terms of fees because there's a lot of risk going on and I need to hold the money, And that's why we pay our vendor quite a lot as well. We don't make much money on this thing at all. Whereas there's a second part of it is the ACH push. ACH push means that you know how much money you have. And so by definition, you can push it out. And so that's why ACH push is next day. And I know that architectural problem for a long time. So some people use Mail. And so Mail offers an interest rate. Great company, keep using it. But even if you use Mail and you connect with Mail, it's an ACH pull. So we are trying to solve basically for the part of distributions because everyone is paying a hefty fee for distributions, and we're trying to solve that problem. Okay, so there's that. For the people who are asking about interest rates, we will offer an interest rate. Right now, it's not being implemented, but it will be implemented in the next 3 months. And it will only work for folks that have more than $100,000 of balance. So you need to have at least $100,000 for that entity before the remaining start getting interest rate. And the interest rate will be competitive and so on. But more importantly, as the interest rate goes down, it becomes less of a differentiator. The differentiator is actually on the ease of your backend operations. So that's our value, which is ultimately we are a software company that tries to speed up your accounting and your bookkeeping and getting your K1s. Talking of which, we are 2 months away from delivering your K1s for all of you GPs, me included. All right, let's talk about flexible funds. All right, so first, for those of you wondering what are flexible funds? Well, first, what's a fund? A fund is a way to raise money ahead of time before you have a deal. That's the main purpose of it. A flexible fund is especially useful for folks that are only raising about $500,000 for another fund or a syndication. And they don't want to create a legal document for every syndication they are going to participate in. This is a movement to counteract the legality of being a co-GP, because being a co-GP has a lot more considerations, legal wise. So people start moving into having a fund structure that abstracts away all their LPs. The con of being a co-GP, to be clear, is it's kind of muddled legal wise, and the second is the lead GP kind of know all your investor contacts and so on. So creating a fund, you abstract that away. You protect your investors. You're the business owner of your own investors, as opposed to you are going into a joint venture with the lead GP. That's all the pros. And also, the con of that is if you try to raise 500K for every single deal, you need to create an offering agreement then, because it's your own unique entity at this point for every single one. $500,000 a raise does not justify the $5,000 you're going to pay for every deal that you're going to raise for. And thus, born this idea of a flexible fund. A flexible fund is different from a Series LLC in some ways. More precisely, a flexible fund can be constructed as a Series LLC, but most people don't. Okay, let me explain what's going on. A Series LLC has been adopted by a lot of VCs in the past. A Series LLC basically say that there is a master LLC. Again, I'm not a legal counsel, so everything I say is educational and so on and so forth. Please check with your legal counsel. You have a master LLC at the top, and then each series, like Series 1, Series 2, and so on, it's its own entity. And they have their own EIN letter, they have their own cap table, and they have their own K1s. That is usually reserved for venture capital. When you try to do that, then each one of those entities is protected by statute, meaning that if one deal goes wrong, the investors of one deal cannot sue you for it does not affect the legality of all the other deals. So you're very much protected. That's the strongest protection of your fund. However, most flexible fund managers do not do that because to do that, it means you are doing K1s for every one of those entities, which by definition defeats the whole purpose. Although some of the larger ones do that because they want the highest protection. So that is the highest protection. The one that is less protection, quote unquote, but most people choose that route is they are flexible fund. They're actually all coming from the same bank account. So the Series LLC actually has to like separate bank accounts for each one of them. Each one of them has its own K1s and so on. The flexible fund, all of them come from the same bank account. And on every single deal, they are protected by what's called let me go into here. Let me go into offering documents, e-sign templates. They are protected by what's called a disclosure form, which you create that disclosure form on Cashier Portal as an alternate e-sign template. And then it says enable e-sign templates for repeat investors. For the people that have invested in your fund already, they will sign, the first time they invest, they will sign the offering agreement plus the PPM plus the offering memorandum plus the subscription document. But the second time they invest with you into another deal within the flexible fund, they only need to sign the disclosure form. But because it's a disclosure form, you are protected by contract and not protected by statute. So you're not really like protected at the most primitive level. You are protected because the LPs don't really have grounds to sue you because they understand that's what they signed up for. And most people on the flexible fund do that. So whether you think that's comfortable or not comfortable, that is really up to the flexible fund managers. But there are lots of flexible fund managers doing exactly that. So I just want to like clear that once for all of like people keep asking, hey, am I protected? Am I not protected? You are protected. It's just that you're protected by contract as opposed protected by like state laws. Okay, I hope that makes sense, and that's just a quick on the legal side. All right, so now with the flexible funds, and by the way, if you folks have specific question about flexible funds, please do put it in the chat because I would love to answer just the questions that are relevant to the folks. Okay. So the next part of it is how does Cashier Portal step into this whole flexible fund? Well, let me talk about what role Cashier Portal plays. Imagine a fund being the ultimate destination. In order to raise money for the fund, you do need an investor portal. And the word investor portal and fund admin gets sometimes intermixed. So, for example, NAC Consulting claims that they are a fund admin that happens to offer a portal. And we claim we are a portal that has a fund admin. So I want to clear up the confusion here. In order to have fund admin, you almost always need a portal. A portal is like a car. Without the car, you pretty much couldn't even have the fund admin. So a portal is almost like the prerequisite to having a fund admin, at least in the 21st century. Back in the day, you can do fund admin without a portal, but now you basically need a car. The fund admin piece of it is kind of like the GPS on the car. Okay. We just happen to have a car that has the GPS built in, but you could technically use your Google Maps to drive the direction. Okay, I hope that's a good analogy. Okay, the legal console is like the insurance for your car. Okay, without the insurance, like this car is not really like legally able to drive on the road. So the legal console is, well, we don't sell the insurance. You have to get someone else to sell you the insurance, which we have our connected our partners, legal counsel partners. So if you go to setting, go to resources, go to fund admin, and you might say, who should I talk to for my legal counsel? You go to resources, fund admin, flexible fund of funds, click on next. And this is the list of attorneys that we recommend in descending order. If you go to, say, syndication attorneys, which is someone that we work closest with, they will give you a casual portal discount, and similarly, and they will take care of you very nice. So you don't pay us, you pay the legal counsel. But because of the a contract that we have in place with them, or like a strong relationship we have with them, they very much know what kind of questions you may have and what kind of setup that you are looking for. Okay, so that's how you get started. So in this order, from top to bottom. All right, so that is on that's how you get started with legal counsel. Okay, so the way you set up the flexible fund is, one is you talk to the attorney, get the legal documents, separate. Then you go on Casual Portal and then you create a deal. A deal is basically a flexible fund, and the deal, you're gonna put the deal type. Instead of direct syndication, you're going to put a flexible fund. So that points out a separate thing about the uniqueness of Casual Portal. Is Casual Portal started off being a portal, and then we add the fund admin on top of it. So we are a car that can drive many types of roads. We are a car that doesn't have just the GPS to a specific location. You can use Casual Portal for syndications, SPV funds, angel investments, and especially syndications. So a single account, you don't have to switch back and forth. And so you can, and sometimes you can raise for SPVs. So same portal. It's just that for this particular deal, if you put flexible funds, it has some additional bells and whistles that will do the accounting for your flexible fund. So you'll raise the money, you'll create the offering, you'll create the disclosure form, you'll set up a call with our team to make sure that you're doing all the steps right. You open up for raising investment. Then you, at the same time, you will, as part of the flexible fund package, you have to opt in for the fund administration part of it. Okay, so that's the bulk of my talk. What is fund administration when it comes to flexible fund? Its purpose is to make sure that you're compliant, make sure you are keeping track of your expenses and income. And some people ask us, when should I start my fund admin? It doesn't matter when you pay for it, but the fund admin contract or the accounting contract starts the moment the first investment comes in. Like the first transaction happens on September 23rd. I just had a call earlier today with our accountant. Say the first transaction happens on September 23rd, 2025. And you sign the contract in January 1st, 2026. Well, too bad. The contract starts on September 23rd, 2025. Because that's we have to start the contract on the very first money going into your bank. Okay. And that's another reason that you should use our bank, because then if you use the bank, then like that's automatically getting reconciled as the money come in, as opposed to like a QuickBooks thing that takes, like on a monthly reconciliation basis. Okay. So you compliant, expense tracking, and from there, it breaks down into the investor allocations. And that's a fascinating topic. So let's go through what that means. Let's give an example. On a monthly basis, you go into, say, May of 2025. This is one of the older ones, actually. On a monthly basis, you can we keep track of how much money you have deployed. Deploy means I put this money into, I send this money to the underlying syndication. Because when you raise the money, it's sitting in your bank. That's a cash balance. But then you send the money to a syndication. You deploy that. You deploy the troops or you deploy the money. When a asset gets sold, it's called undeployment. So the money comes back to you. So this is also known as it becomes cash balance back into your bank account. So those are deployments and undeployments. The undeployments that are coming in deployments is a type of income because it's the money coming in. But there's another type of income coming in. It could be your operating income coming in. This operating income, by the way, could be a distribution from the fund or syndication you invest into. So you are a flexible fund, you invest into multiple holdings. So far, so good, right? And each one of those holdings every quarter, every month will give you a LP, because you're LP on their deal, a single distribution. That's the operating income coming into the fund. Okay. Then on the expenses side, you might spend some money on your expense reserve, which is very typical. You also spend some expenses on management fees. You might pay for cash portal. You may pay for the attorney. You may put some money into marketing expenses. You may pay for Zoom and so on. This is the fund level expenses. What's important here is you don't keep track of the asset level expenses. Like say you invest into a syndication and that syndication owns a property. What happens on the leasing of that property is none of the fund's concern. You don't care about that because the income is simply distribution to you. So you got the income and you got the expenses. And you're like, okay, this is it, right? Like what is so complicated about this thing? Nothing. It's not that complicated. What gets complicated is you only know the total income and you only know the total expenses. Your investors are coming into different deals within your fund at different times. You don't know how to allocate the $2,000 of expenses down to the individual LP level. That's the crux of the problem. So you could build this thing by using what's called a spreadsheet that allocate the contribution date of all your LPs. Okay, my LP comes in on July 1st, 2025. Another LP comes in July 27, 2025. And then another LP want to reinvest some of their distributions from one deal to the other deal. Then, okay, how much income does LP1 have by the time it's their K1? And how much expense does LP1 have when it comes to their K1? You can try to solve that using a spreadsheet. And actually, all the fund admins out there, almost all, not that I think about it, do that on a spreadsheet. So what they do is you basically spill all the numbers. They have access to your bank account. They will do all the math, and then they will basically send you a report. Say, hey, we did all the math, and this is what the report looks like. The problem we felt with that approach is that you actually don't know how the math works, and the report doesn't really have all the calculations, and the spreadsheet is not the best for basically replicating your waterfall and so on and so forth. The approach that Cash Portal took is that we spin that procedure into a software. And the software is the following, is when you add an income, at the bottom, there is an option called allocation. And the allocation can be based on the economic incentive, which is what's your waterfall. That the waterfall you use for income is literally reversing it. So here's how I get my waterfall based on this is the asset management fee, 80-20 split. Well, if I have this much income, then what will be everyone's income be based on the economic incentive of every investor, or based on their deployed capital, based on the daily active value of each investment cash balance, and so on and so forth. That's for the income. So every transaction you have, we allow you to put in the allocation method. And so it's doing the same thing. It's just doing it the software work. For all the expenses you have, you also have an allocation method. And usually for the expenses, it's based on daily active value. Daily active value means I have 40 investors. This investor stay in the fund for 35 days. This investor stay in the fund for like whatever days. And so every single day, what's the ratio of that investor compared to all the other investors? As you can imagine, when you add one more investor, the expenses get distributed very, very differently. Like literally adding one, everything gets shifted. When you add one more, everything gets shifted. And then there's the daily component. Every single day, what is their component? And then you almost like sum up the area under the curve. Okay. That's essence of fund admin. I just gave you like what admin is trying to do in like literally like the last 5 minutes. The problem is that it's really hard to do that on a spreadsheet. It just turned out that in the last 3 years, Cashflow Portal built what's called a distribution engine, which we are applying the patent for. And we can do that using software as opposed to spreadsheets. And that's basically what will end up solving a lot of the accounting problems and the bookkeeping problems. Okay, so now I have this expense and tracking done. Let me tell you what is the benefit of creating such a thing. By the way, if you have questions, feel free to ask in the comments there. The benefit is the LPs can see their account statements with a click of a button. They can see, oh, my quarter to date beginning balance is 259,000, and of that, 800,000 is for my reinvestment, because it gets complicated. They say, oh, I want to reinvest 50% of my dividends back into the fund because I want that to keep growing, right? I initially invest 250K, but 8,000 of that is actually redistribution. This is the amount of my capital distributions. This is the net income, of which some of it is my dividend income, some of my expense reserve, some of it is my net income, and then this is my technology platform fee, and this is my ending capital balance. This is on a quarter to date, year to date, and investment to date. Okay? Having this account statement is going to be prevent you from, for all the legal reasons of like, hey, we are doing our due diligence as a fund manager, and we are providing these quarterly reports to our investors. So this is important. Earlier, yesterday, actually, I got an email and say, hey, if you are doing all this accounting stuff and all this account statement, that's cool. Like you basically know everything about our business. Are you doing the K1s too? And to that question, the answer is a resounding yes. We are absolutely doing your K1s. We have two things that I want to show you about the K1s. One is we have this amazing ability to show a drafted K1. So let me click into the same person, Nate. Because we know your beginning capital balance and your ending capital balance, and we actually we know your ordinary biz loss, negative $4,000 for this particular K1, and then you have $19,000 of net income. This is your ordinary dividends, and this is your capital gain. This is your beginning capital balance, and this is your ending capital balance. This has been pre-calculated. Last year, we were not sure if this math is correct. So someone used their own accounting method, and at the end, these numbers are 2 cents off. Like, wow. But so that's the first part. Like, basically, at some point, Cashflow Portal is just as good as an accountant. But we're not an accountant. Please don't ask us to file your K1s. So the second part is, as part of the fund admin, you will get a dedicated accountant that's also in deep partnership with us. And you have to get an accountant. And they are responsible for not filing the K1s, but also doing the tax returns on your behalf for the fund. Not for the manager LLC. Manager LLC is a separate discussion for the fund. And that's included in the pricing. Okay? So that's that. And the last thing I will also say, just as a tip for everyone, if you are doing a flexible fund, whoever is doing your accounting and bookkeeping should be the same accountant or firm that does your taxes. If one person is doing your accounting and then you go to someone else for your bookkeeping, they basically have to for your tax services, they basically have to start all over again and da da da. So it's really important that you kind of like have this vertical stack of the same firm that does everything. The approach we take is we will end up working with different like CPA firms, different attorneys, and so on. But we will make sure that we are always in the loop when it comes to accounting. So every time when you talk to the accountant, you can, for as far as the fund is concerned, you actually don't talk to them directly. You talk to us, and we invite the accountant to the call, so that always is a three-way sync. If you have questions, you will let us know, and we can do the we can answer the questions at this, or we will loop in a accountant. And the reason is this way is that I mentioned about the banking in the beginning, right? I also mentioned about accounting in the beginning. We are currently still using QuickBooks because we're not as powerful as QuickBooks for your funds accounting. So what happens is that we have a QuickBooks account that does all your fund level accounting, and then we migrate the numbers from the QuickBooks into Cash Portal so that we can allocate all the income and expenses down to the investor level. But very soon, there will appear a button called Accounting, and we will hopefully get rid of QuickBooks and just put all the transactions directly on Cash Portal. And that's when we start using some of the machine learning and artificial intelligence to help classify your books directly. Okay, so eventually it will be cheaper. Eventually it will be AI doing your classifications and so on and so forth. That's the future we want to go. But right now we are definitely at feature parity or even better than all the fund admins that I know. Okay, if I have to be concise about the difference is, most fund admins are using a spreadsheet, means that you have to duplicate your waterfalls, which also means that they may have a template that does not serve your waterfalls. And you have to oh, I'm so sorry, you have to change your operating agreement to do this waterfall because we only have this template. Don't worry about that problem with us because we built the most sophisticated waterfall engine. So that's that. All right, that was a lot. So let's talk about some questions here. One question I have here is, by the way, put in your question here or raise your hand and so on. Is there an easier building way we could raise both capital for individual deals within a flexible from certain investors and capital that sits at the fund level from other investors that invest across all deals? Does it require set up two funds or nest them somehow? Okay, so Jing is saying, can I have certain money that hey, this person I want to invest, say, $10,000 across all deals. It's like a preset, which is I want the diversification. And then there are some investments that will go indirectly. So the answer to that is great question. So a blind fund, you cannot have the investor choose how much money they want to invest into a specific underlying holding. That's a fair statement. So, which means creating a blind fund, if you have to create exactly one fund, a blind fund is out of the question. So what you do is you create a flexible fund. But then for the person that says, I want to put $10,000 across all deals, unfortunately, in a flexible fund, they have to sign a disclosure form for every one of them. So you just have to remember that they're committing for 10,000 again. So you send them over, because the way the flexible fund works is that each one of those holdings is almost like a separate entity that's protected by contract of a disclosure form. So there's no way to say I sign something and then my money gets automatically rolled over. So there's that. If you create two funds, one is a blind fund, one is a flexible fund, that also solves your problem. But I don't think that's worth the cost to creating two funds just to solve that one problem.
And my question wasn't even if the people add more money and we redeploy it across all the assets. It was even if they're already deployed across all the assets and we add one asset, we want to rebalance whatever the class already has to include the new asset. And when one drops, we rebalance it and so on.
That usually doesn't happen on flexible fund. And the reason is on flexible fund, each one of those actually has a close date, which means that once that thing closes, you actually shouldn't add more money into it.
Yeah, I guess you can't because you take somebody out. Yeah,
Exactly.
interesting.
Yeah. So
Okay.
flexible fund is pretty fixed in that. It's really trying to solve the cost GP problem. So the rebalance, the automatic rebalance, it's usually part of a blind fund in that case.
Yeah, but so I could create basically a blind fund and add the
Mm-hmm.
blind fund as a partner in each deal of the flexible fund, except once it's closed, I can change the amounts. But at least the blind fund can be a partner there, and whoever joins the blind fund will be rebalanced across all the holdings that the blind fund has in the individual deals.
That's one way to do it. Yeah, that's fair. Mm.
Okay, thank you.
Cool. Yeah, thank you. All right. Cool. The next question is asked by Chris. Can investor statements be altered to include month to date and be provided monthly instead? So great question. So if you click on any one of those investments, there is the quarter to date, year to date, and investment to date. We can 100% add the month to date. Thank you so much for that comment. And then can they be provided on a month to date basis? That's a great question. So the accounting and the bookkeeping is done on a monthly basis, but usually the contract that you sign with us is a quarterly. Our pricing is by default quarterly. If you want monthly, it might be a little bit more expensive. That's not a function of the software. That's just a function of, okay, it's a different contract for the CPA because they have to do more work. And however, from a software perspective, 100% the statements can be generated on a quarterly basis. It's a monthly basis. This is monthly anyway. So there are two parts. One is adding that monthly column, and then second is about the cadence of the accountants. Monthly, it's a little bit more expensive, but that is something that we have customers being done too. Okay. So that's Chris's question. So Ray, since CFP is generating K1s, we still need to involve the CPAs in the process. So CPA is doing your K1s. You do not need to involve your own CPAs. We have a CPA for you. But just to be clear, I check all the boxes. There's still a CPA involved. It's just not your CPA. It's our CPA. Okay. And then the next question is about how soon after the end can CPA complete the K1s? CPAs are notoriously late with these. I just finished a call with the CPA, and yes, this is the busiest time for them in the year. I will tell you with flexible funds, just to set some expectations, the CPAs that we work with are excellent, but what's the best way to put it? Like the deadline is not really contingent upon them. It's really contingent upon the K1s being delivered to the fund by the underlying holdings themselves. Right. So if like you invest, in a DGP that takes until July to give you the K1, there's almost nothing you can do. So we don't want to make that statement of like we definitely will get you by March 15 and so on. That being said, if they do give them K1s to you by say February 15, we will be able to complete the K1s by March 15 and so on and so forth. And that's also another important thing. If you don't use our accountant and bookkeeper, then you will have a much more difficult time of filling out the K1. So that's why they have to be streamlined. It should be the same party. Ideally, they are part of the same company so that their bookkeeping and accountant can talk to the CPA and say, hey, this is what I did. So they know the whole process. Okay, so that's what I will say. All right, so those are the questions I got answered. This could be a relatively quick call. We are already 40 minutes in. Yeah, let me pause. Okay, another question. How do you handle text info projections for K1s, which are relying upon underlying holdings and final K1s and the UBTI? So great question. It's a text question. So all the depreciation stuff and also the small business, the IRA taxes, that most likely will not be captured in the K1 drafts. That is usually something that the underlying K1s will tell you the answer, and then that's part of the tax preparation process. So that I agree. That's why it's not perfect. Because there's some information you don't know until the very end, which is like but at least there's some estimate. Okay. Cool. All right. All right. Next question. David asks, maybe you covered this at the very beginning, but could you please explain what you mean by your own bank? So yeah, for the folks that joined late, I was talking about that as a new update in Cashflow Portal, when it ties to the accounting and fund, is we partner. We have basically, you can create a bank account directly on Cashflow Portal. Okay. And this is a bank account I create. This is real money, and I can deposit more money, and that's part of my North Haven Terrace, and I can put more money in. Okay. I can withdraw, and this can accept distributions. This can accept ACH funding, and this can make distributions much faster and much cheaper than the way you currently do it using Dwolla, which is very expensive. The part that I'll try to explain is that we are not a charter bank. A charter bank is like we need to prove to the SEC or whatnot that we have all the documents to create a bank. We're not a charter bank. That's a separate process. We partner with a bank, and the way you can see what bank we partner with is you click on our own entity, you go in here, you go into this dashboard, and basically it says core bank partners with Cashflow Portal to offer banking services. So ultimately, you end up creating a core bank account. And just to be clear, like all the banks that you use, like RAM and Mercury and Mail, they're also not a charter bank. They always partner with the underlying bank. And their underlying bank is Grace Hopper, and our underlying bank is Core Bank. So the benefit for you is so you are a core bank customer, but you couldn't you can actually even have a core bank account, but all the money movements is done through Cashflow Portal. And so the nice thing about it is that you own this bank, and then we can see your bank balance. And as such, when it comes to doing your accountings and bookkeeping, we have direct access to your bank. And because you're the owner of the bank, and now you're we are also the account infrastructure. We also like know the account balance. That's why when you try to do distributions, it's next day. Because you just like when you go to Chase and you try to do like ACH, it's always next day. Why? It's not that Chase is better. It's just that the Chase knows your balance, and at this point we also know your balance. And that's why before I was talking about like ACH pull and ACH pull, when you try to do it through Dwolla, it's a pull, and that's a third party that doesn't know your account balance. That's why it takes 3 to 5 business days. Once we know your balance, a push is next day. And the idea is that to try save our clients money by creating a bank. Okay. Creating a bank is super easy. It literally took me like less than 5 minutes. This is something I created. So I added $1,000 into the bank account. Okay. All right. So that's on the bank. That's on the flexible fund. We talk about the fund admin, talk about compliance. Oh yeah, compliance. Let's talk about compliance. So Blue Sky, we automatically fetch all the state, and we even tell you when is the very first investment date. You're supposed to file this within 15 days of when you receive the money, and then you can keep track of when I file the Blue Sky filing. With Blue Sky filing, there is it's $30 per state per filing, in addition to all the state fees. That's very standard. So there's that. You actually ask the attorney to do that, but the attorney can record it, or you can record it on when you file. And when it's time to file and make sure that the next filing and so on, usually there is a reminder email being sent out. Okay, so there's that. FATCA is for international investors. If you don't have any international investors, this doesn't apply to you. CRS, same thing. Beneficiary owners, this is no longer a problem because I think before you have to like report all your beneficial owners once a year and so on. But now I think most people, there's like a whole like bill that tried to pass but didn't go through and so on. So that's the compliance part. Okay. So here's the dashboard. You see the bank balance, the gross income. This is all the metrics. This is the cost metrics. Every investor has capital balance, capital contributed, cash balance, how much being deployed, their income, expenses, expense reserve, any one of those management fees, their returns, and how much preferred return has been accrued. Okay. Each one of those investments, just so you get an idea, if you click on capital transactions, it's really cool. It says, I initially invest 400K. And then I got this amount of income. Then I got this amount of interest income. And I added this amount into my cash balance. And I report this amount of rental loss. And this is my other rental loss. As you can see, all these things are tracked in the software now as opposed to on a spreadsheet. This is all my withdrawals. And so this is because each investor basically has their portion of the expense, of every single expense. And so that's very, very clear. Okay, so that's what that looks like. So that's in the whole capital transactions world. All right. I think that was a lot. Let me pause here for more questions. Cool. Not that many questions today. Oh, very good. Very good. So CFP does not file the Blue Sky filing directly. You will ask the attorney, but if you do use the attorney, the contract we have the attorney is that it's $30 per state per filing, and we have 800 customers, and like we could have also done the Blue Sky filing for all the syndications, but we just decided that that's not within our business. We should not. Let me use the car analogy. We're not an insurance company, so talk to the attorney on that, but they usually do it for very cheap. Okay. Reasonable price there. All right. Awesome. Thank you, Ray. I think that's pretty much it. If folks don't have questions, how do you get started? The best way to get started is you go into resources, fund overview, click on get started with funds, click on flexible funds, talk to one of those attorneys, click on next, click on schedule a call with us, and then schedule a call with us on the accounting side. Okay. The scheduling a demo is always cashflowportal.com/demo. I'm going to send this to everyone here. So you can book a demo here like that. Cool. Awesome. So that's on the, how do you get in touch with us? Yeah, we are super excited about the what the future is for fund admin. I will also say that being a fund manager is a lot of work. So good luck on that endeavor. If you are an existing fund manager that's using a different fund admin or portal and you want to consider us, schedule a call with us. Happy to walk over the migration process. We handle all the migration. We will copy everything line by line from your portal. And as part of that migration, you might even find out that there are a lot of incorrect, transactions on your books, and we will also correct them. We have migrated a few customers over in the last couple months, and are happy to give references to those on what their experience has been like. Okay. The people have said, I am a co-GP on some deals, I am a lead GP on some syndications, and now I'm also doing some SPVs, and now I'm doing like flexible funds. And my SPVs live on one portal, my syndications live on another portal, and my flexible fund live on the third portal. And when it comes time to my K1s, I literally go into my investors don't even know which portal is my thing located. And I'm here to say we can consolidate all of them into the same price, into a full package that will take care from SPVs to fund admin to flexible funds and to your syndications. So schedule a call with us and we can chat more. I hope that 2026 will be a year of operational streamlining for a lot of you.